Good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. A good Wednesday morning, given the fact that global cues are fairly strong. Wall Street kicked off a truncated week on a very strong note. It was a 2.5% rally on the Nasdaq. In fact, we also are waiting for the Nvidia results today. In the run-up to that, a very strong close on Wall Street. In fact, major indices have snapped out of a 4-day losing streak. This morning, Asian markets are also fairly strong, and if you look at the GIFT Nifty, although it is hinting at a mildly lower start for our market. Remember, we did see a mild pullback after a very strong rally over the last two sessions. After the pullback, are we going to see some bit of a rebound, or is the volatility going to persist ahead of the monthly F&O expiry, which takes place tomorrow? That's the key question. But 24,800 has been defended on the downside, and that that's something that we should take heart from, because 24,800 to 700, technical analysts have pointed out this zone to be a crucial support zone for the index. Lots to watch out for. We also have the stock of the day, ITC, because British American Tobacco, that company will be selling somewhere around 2.3% stake via block deal today. So that stock will be in focus. LIC will be in focus as it has reported its fourth quarter numbers. Lots of other stocks will also be in focus. We will touch upon that, but we'll also get your stock related queries addressed on the show. So keep them coming in. We will try and take stock of them as well. But before we move any further, quickly take a look at the top stories at this hour. Holiday truncated week with all three major indices up anywhere between 1.5% to 2.5% as EU tariff delay lifted sentiment across the street. Asian markets, a surge in early trade mirroring the gains on Wall Street. Both the Nikkei and Kospi were trading up by 1% or so, but the GIFT Nifty, as I mentioned, is hinting at a mildly lower start for our markets. Oil prices ease overnight as US-Iran talks, OPEC plus plans spur supply concerns. Meanwhile, Trump's tariff reprieve pushes gold down for the second straight session, but in the futures, gold prices are seeing some bit of a mild recovery. Well, big block deal to watch out for today. ITC's largest shareholder, British American Tobacco, will sell 2.3% stake worth 11,600 crore rupees today. Post the block deal, the BAT's stake in ITC will stand at somewhere around 23.1%. Well, those were the top stories. Then quickly take a look at what transpired in trade yesterday. We did end near the day's low, but it was a fairly roller coaster ride for the benchmark indices, especially because the Nifty started gap down. It was down over 200, 250 points or so. It fell below that 24,750 mark, but then around 11:30, 11:35, we saw a very sharp rebound when the market recouped all of those losses and came back into the positive zone. But again, it succumbed to selling pressure, and then we ended near the day's low. But what was heartening was the fact that we have managed to defend that 24,800 level. The mid cap end of the market continues to outperform. Both the Nifty mid and small cap indices ended the day in the green. Market breadth, however, was in favor of declines, but advanced decline ratio was even Stevens at 1:1. IT, FMCG, auto sectors, these are some of the sectors that snapped out of a 2-day gaining streak, but defense stocks continue to do well. The defense index was up for a 5th straight session. FIIs once again were net buyers for the 3rd straight session. Almost 350 crore rupees worth of stocks bought in the cash market. DII buying figure was high at 10,000 crore rupees in equities, but remember there were two block deals as well yesterday, Indigo and PG Electroplast. But in terms of put call ratio, it dropped to 0.2 vis-a-vis 1.06 in the previous session. And if you take stock of the stocks that will be in the F&O ban, no new additions, but RBL Bank continues to be in the ban list. But Chambal Fertilizer, Hindustan Copper, Manappuram Finance, Titagarh Rail, watch out for these stocks as they have exited F&O ban. On that note, quickly bring on board our guest for today. Joining me is Jay Thakkar, Head Derivatives and Quant Research at ICICI Securities. Jay, speaking to you after a long time. Hope you're doing well. We've had early monsoons this time around, and we've seen incessant rains from the start of the week. At least on Monday it was raining gains, but yesterday we did snap out of that gaining streak. How is it looking like? We have managed to defend 24,800 on the downside. What will be the nearest support level that you'll be watching out for in today's session, and the nearest and immediate resistance level as well. Take us through that.
Sure. Very good morning to you, Nandita, and thanks for having me on your show. I mean, it's almost like quite a month or so that I've come to back to your show. I mean, I was on a vacation as well. So yeah, as far as the index is concerned, Nandita, as you rightly pointed out, I mean, both the frontline indices, Nifty and Bank Nifty, have been trading within that range, especially the Bank Nifty. I mean, if you say 23rd April was when it almost hit its lifetime high, and since then we have been seeing it's not able to surpass approximately, I mean, if you round it off, 56,000 levels on the upside. So it's facing resistance there, and mainly if you see the private sector banks which have a higher weightage in the Bank Nifty. I mean, Bank Nifty contributes around, or BFSI contributes around, say, 38-40% in the Nifty. So that is pretty much required for Nifty to continuously move higher. Now that part, or that portion of the market has gone sideways since 1 month or more than that now. We're already on 28th, right? So private sector banks largely, which hold a higher weightage in the Bank Nifty, mainly if you see ICICI Bank. As a disclaimer, it's not a view on ICICI Bank. I mean, I cannot. But then, ICICI Bank, HDFC Bank, SBI, or maybe even for that matter, Kotak, all of them have gone sideways. Okay, which, and hence these private sector banks, and probably SBI has a higher weightage in the Bank Nifty, and if they go sideways, Bank Nifty is not going to provide that breakout and provide that momentum. So you get a hint of a breakout of that range, and that would be a sustained move thereafter, because after a 1 month consolidation, if Bank Nifty manages to take off 56,000 levels, I mean, it can easily give you 3-4% kind of a up move. So at least 57,500, 58,000 is what you can expect minimum, right? This is what I'm anticipating. So you're asking me about the resistance of Bank Nifty, 56,000. There you have it. And above those levels, it's a blind buy. Obviously, I mean, no one is 100%, so nothing is certain, but definitely it becomes a very high probable trade. With a stop loss of around 1% or so, you can target 3-4% on the upside. So that would be a favorable risk reward. Now, likewise, on Nifty, you have 25,100, 150. If you want to play safely, prudently, then 25,150 would be the level beyond which you can get that 3-4%. At least until 25,800. If not, we are going to all-time high, then at least 25,800 is what you can eye for. And obviously, these days we have seen, Anita, that 24,800 has proved to be a very good support. And below those levels, 24,500 and 300. I mean, last weekly settlement, if we see on Nifty, it had come to those levels of 24,000, to be very precise, 24,462. And you have this gap support at 24,400 or something. Below which, if Nifty goes, it will attempt to fill that gap of 24,150. Right. So I think that the range for Nifty has also got defined now since past 1 week or 10 days. That is 24,400 to 25,100, 150. That's almost 750 points range. So if that provides the breakout, again, you have that 3%. I mean, 750 and 25,000, approximately 3%. So both the indices will provide a breakout. Then you get a 3-4% up move. Else, you will see some consolidation happening. Because the only factor which I can see is the India VIX. And then since Friday, it's been rising. I mean, from 15, 16 levels now to 19 levels. And because of that, the volatility which you mentioned, 11:30 kind of a thing, that's happening. So unless we don't see a cool off in volatility, I think market may trade within this range with a high volatility, and the breakout will be unlikely.
Got it. Got it, got it. Okay, so we're getting the first ticks. The first tick was positive, but we have slipped into the red. We're down 50 points on the index. The Nifty is around that 24,770 mark now. So 24,750, that'll be the one level to watch, and then 24,700 will be in focus on the downside. The mid cap index continues to show some semblance of green on the screen. Mind you, it has been outperforming over the last couple of days as well, and today as well when the markets are weak. we are seeing the mid cap outperformance coming in. As of now, the advance decline ratio is 3:1, almost 4:1, so to say, on the NSE. 1300 advances to 375 declines. So early days to comment on whether or not this is, this will be the trend throughout the day. But for now, the advance decline ratio is firmly in favor of gainers. In terms of Bank Nifty, flat start, 55,340 or so, 350 or so. That's where we are hovering. But in terms of other sectors, want to see what the auto and FMCG packs are doing, because those sectors were upbeat on Monday, I beg your pardon, on the back of early arrival of monsoon, and then they did snap out of a 2-day gaining streak yesterday, some bit of profit taking in both the sectors. But today, sectorally, if you see, autos are trading with the negative bias, but IT is showing strength today. That index is up 0.5%. You see PSU banks, that index is also holding out, and so is the realty index. But if you look at metals, they are down. Pharma sector is also trading in the red. Oil and gas marginally in the green. So it's a mixed picture really, but as of now, it's the IT pack that's taking the lead. Let's take a look at some of the individual movers on the index. Then Jio Financial, remember, was the top Nifty gainer yesterday. Today as well, it is the top Nifty gainer, followed by Infosys. Then there's Bharti Airtel, Tata Motors, Wipro, NTPC, Power Grid, TCS. Some of the these names doing well. Dr. Reddy's from the pharma pack is also holding out, and you have Bajaj Finance, Adani Ports, Trent, all these counters doing well. But of course, as expected, ITC is the top Nifty loser, 3.5% loss here. The stake sale by backed via a block deal, that will be in focus. We'll take stock when that really happens. Aside of that, if you look at some of the other names that are not doing well today, Titan, Nestle, M&M, JSW Steel, Tata Consumer, Hindalco. So it's a mix of FMCG metal names that are dominating the losers list. Even Reliance Industries is trading in the red. So is Kotak Mahindra Bank and even Maruti. So all in all, flattish start now, so to say, because we are down somewhere around 20 points as we speak, 24,800 on the charts, and mid cap index building on the outperformance that we have seen. Bank Nifty as well has managed to break out in the green. But auto and FMCG, I want to get in your thoughts on these two pockets. One would be optimistic on these pockets with the early arrival of the monsoon. But yesterday we saw profit taking. On the charts, any stocks from these two sectors that stood out for you?
Sure. Sure. See, Nandita, I would say that as far as the FMCG's index is concerned, I mean, see, there are a couple of reasons for these two sectors positionally to perform, Nandita. One would be definitely the monsoon for the FMCG definitely is always positive. The crude oil prices have remained almost down, so that's positive. I mean, these are some good fundamental reasons. Apart from that, what our honorable finance minister mentioned in the last budget, giving the relief of income tax, no income tax until 12 lakhs. So that revision of these slabs definitely would help the disposable income, and that would definitely help any companies which has a lot of chance of having this kind of demand from the people would definitely benefit. It can be auto, mainly two-wheelers, and the early four-wheelers, I would say all lower levels, mid-segment four-wheeler companies, or maybe those manufacturing those kind of products. FMCG, definitely hotel industry, or tours and travel and tourism. So all of these are good fundamentally. I mean, if you say consumer durables, so one of those factors would be a good game changer over a period of say 1 or 2 years. I mean, you will see that demand coming in, and it would just be implemented from this or this financial year, right, Nandita? So it's just a month or two when you've seen people must be getting more money in their salary account. Now the thing is, since past couple of trading days, I mean, FMCG was one of the sector which was outperforming the index, and it had recovered quite sharply. But now it's been trading a bit sideways, gone into a formation of symmetrical triangular pattern. So on the index specifically, I see 55,000 a very crucial support, and it's trading right now at 55,950. Nandita, 55,000 levels are held on a closing basis. I think FMCG index still has a way to go up, at least until 58,000 to 60,000 levels, in the June series. Only below 55,000, we will see that trend reversal from up to down. Now, as far as auto is concerned, definitely, auto too, as I mentioned, two-wheeler names and all of them are quite likely to benefit, and they have underperformed the Nifty, they have underperformed the auto sector. And I think Bajaj Auto, I mean, is one of the sector where we have seen good amount of shocks. So that stock at 9,000 right now is good from the short to medium term perspective. Uh, Even for that matter, if it dips to around say 8,500 or so, you get a good chance to enter, because I think really 8,000 levels are held now on Bajaj Auto. The overall trend for the short to medium term should be positive. I see a good risk out there in Bajaj Auto. And mainly, as I said, in the two-wheeler space, Hero has already run up quite a lot. But for that matter, even if that dips, it would be a good opportunity. But if I have to choose one, it would be a Bajaj Auto. I don't know how that deal plays out if Bajaj is trying to buy out the KTM entirely, and how going forward the sales and all will help. But then I think the company, whatever it has done in past, has taken good decisions, and the management is strong. We all know that, and the benefits, as I mentioned, are likely to be seen, going forward in coming quarters. So, from the value perspective, from the risk reward perspective, even for short to medium term trading perspective, I think Bajaj Auto looks quite a good probable bet.
Got it. But since we were talking about FMCG, let's talk about ITC. The big block deal has happened. I think 2.5 or 2.6% equity has exchanged hands worth 13,344 crore rupees at a price of 417 rupees a share. So this block deal has happened. The stock is down 3.5%. And if you look at the charts, 1 month, 5 days, you will see that it hasn't really done much. It has been stuck in a downtrend, although last 3 months, if you look at that in isolation, it has given some bit of mild positive returns. But at 420, what should one really do with an ITC? Are you spotting a trend? Is it expected to remain in a downtrend? How should one navigate this particular counter?
Well, see, Nandita, I would say that if IT, obviously, there was a good consolidation which was happening in ITC, at least until last Friday, I would say, or probably since until Monday. In fact, on Monday, it provided a breakout from that consolidation as well. It's just that with this kind of a block deal which was announced, otherwise post results, if you see, the stock has moved up. I mean, from 420-25 levels, it went up to 440 plus levels. But what has happened is, because of the block deal, definitely it happens at the lower level, mainly with the huge kind of a shares. We have seen this breakdown, but then that's not been confirmed. I think it should be ignored. I mean, if we see a follow selling below 415 or 410, close below 410 would result into further consolidation in ITT, which can take it down to 370, 360 as well. But if until ITC manage 410 levels, I think the stock can make a comeback, because it's a block deal impact, nothing, no result impact, right? Otherwise, it can see the levels of 400, 460 again. So for me, ITC is a buy at these levels with a stop loss of 410 on a closing basis.
Okay, that's the view on ITC. Today under pressure because of the block deal, but may have broken out of that consolidation phase. But let's talk about LIC. Stock is up, almost 4%. Numbers came out, and numbers were fairly okay. They have bettered expectations, but in terms of VNB margins, that was below expectations. Profit jumped somewhere around 38%. New business premium was down 9%. Annual premium equivalent was down 3%. Value of new business was down 14%, and VNB margin stood at 18.8% vis-a-vis 21.1% on a year-on-year basis. If you look at the brokerage calls, Goldman Sachs has a neutral rating. Target price is lower from where the stock is right now at 880 rupees. Look at some of the other brokerages. I think Motilal Oswal has a call on this particular counter. I think they have a buy rating, target price of 1050 rupees. they have noted that the annual premium equivalent has declined, but according to them, VNB margin has seen some bit of an expansion on a YY basis, and the fact that rising non-par contribution. Is something that has worked well for the VNB margins, and management is also expecting premium growth to recover going forward. Given the kind of good returns that LIC has given in the last 1 month or even 3 months for that matter, would you expect the stock to make a dash at 1,000 anytime soon, Jay?
Yeah, Nandita, I think yes, there is a fair chance of this stock to be back to 1,000 levels. I mean, there is where technically you have that previous swing resistance, point one. Point two is that we have seen short covering again. I mean, see, this stock entered into FNO, I mean, you can say since December, and we saw shorts getting built up in the stock, and because of which, uh, you know, I mean, when it entered, it was at 1,000. From 1,000 levels until 700 approximately, the 300 points cut is 30%. Nandita was short covering looking at the FNO data. Okay. Now we have seen good shorts getting covered right from 1,000 until now until 900, and I think it started from 1,000. So that again, from the derivative point of view, that's the second confirmation of 1,000 to be a level one should be eyeing for. I mean, until 800 levels are held, I think, or 850 levels for that matter, on closing levels is held. You can see that coming in. And if I'm not wrong, I think LIC has become world's largest company to collect the overall premium amount. I think in FY24, maybe FY20, or this calendar 25, I think, until now. I forgot on what I exactly read, but then that's what it has become. So, no doubt, I mean, it's doing good as far as, the premium collection and all is concerned. I mean, otherwise it wouldn't be number one in the world as far as collecting the premium. Uh, uh, LIC has been doing a lot of market and other kind of investments as well. I mean, overall, it has been doing good there as well. So net, the overall outlook for the long term is positive for the stock, no doubt. For the short term, I think until 50 levels are 1,000 can't be ruled out.
Okay, 1,000 is possible on the charts. And of course, the stock has been doing fairly well if you look at the last 1 month, 3 months, etc. But let's talk about defense name Bharat Dynamics. Defense pack, of course, has seen renewed momentum. You had the Nifty Defense Index gaining for I think a fifth or sixth straight day today. But BDL, Bharat Dynamics, is one stock that has snapped out of the winning streak. It has reported numbers. Profits were down 5.5%. Revenues, however, have come in higher at almost 1,800 crore rupees vis-a-vis 854 crore rupees on a YY basis. Margins have seen a sharp contraction at 16.8% vis-a-vis 37% on a year-on-year basis. The stock is reacting. It is down somewhere around 2.5% or thereabouts, but of course, as I mentioned, it has the entire defense pack has seen a renewed momentum in the last 1 month, particularly for BDL. The stock has gained almost 28%. But after today's dip, what would you do with the stock at 1,900? Do you think it is a buy on dip, or do you think it will? In fact, it will not give more opportunities on the downside going forward. And today could be the day when you can actually lap it up.
Yeah, BDL, I agree with you that, I mean, overall defense has done quite good. I mean, it has outperformed the overall market. I mean, in the last couple of months, if you see the one sector which has given the highest return, I think, if I'm not wrong, it's defense. Overall, sectorally as well as individual stock-wise. BDL has shown a good run up. I think the risk reward right now, Nandita, is not great from initiating longs from these levels. I think yes, buy on dip should be the strategy. I mean, at around the levels of 1,800 or so, if you get a cut of 5%, could be a good level to actually enter. And there too, you can review whether it's going to be just a dip and then you get a immediate up move, or probably it might consolidate after having run up by almost 30% or so. I mean, generally, as we have seen, that Bank Nifty was outperforming the Nifty and it had a great run up, but then after some time, it took a pause, breather is what we say, right? And consolidation since a month or so. So that is what happens. I mean, whether it is a stock or an index, obviously for a stock, it would have a huge or a higher run up, and thereafter it takes a pause. But it looks like it will take a pause right now. I mean, as far as the defense names are concerned, for me, as of now, the risk score is still favorable in HAI, relatively. So if someone wants to go long and even at current levels, HAI probably provides a better risk score than BDL.
Okay, that's the view on the charts. HEL perhaps presents a better opportunity than BDL, but let's shift focus to viewer queries then on that note and get them addressed. The first one's coming in from Naveen, and he has a query on Coromandel International. Uh, this stock has been on an uptrend, so to say, very close to 52-week high as well. Uh, how is the risk reward looking here? Because the stock has rallied almost 8% in the last 1 month and approaching those 52-week highs of 2514 or so. Uh, is the risk reward looking good here, or would you say it's not looking much favorable?
No, Nandita, I mean, see, the stock has shown a good run up prior to monsoon, whether it is Coromandel, Chambal, and I think now it's showing some negative divergence on the RD charts, and we might see some profit booking coming in this stock because 2500, maybe 2520 is really acting as a very stiff resistance now in the near term until those levels aren't taken off. And there is a fair chance that if, the stock dips or corrects until 2200. So I think even someone wants to short or create a short positions or maybe a bearish strategy, the risk reward is favorable as 100 rupees will be a stop loss on the upside. 200 rupees will be target. It's a good, decent 1:2 risk reward on the minimum side.
Hmm. All right, that's the view. Hope that answers your query. The next one's coming in from Kishore on Neogen Chemicals. The stock has, seen quite a bit of a downtick if you look at the YTD charts, but in the last 1 month, it has managed to stage some kind of a recovery. Today, of course, seeing some profit taking after, gains over the last 5 sessions. Neogen, then, what is the closest resistance level you'll be watching out for here?
See, the closest resistance level would Nandita here would be around say 1800 and thereafter it would be 1900. And even if it bounces back, I think these are the only levels where it can bounce back until. Because see, overall the monthly, weekly momentum is not that great. I mean, the stock had a rally from 250 rupees until 2350 rupees. So it's more than 10 times is what stock actually moved up to. And now it's got into the correction phase, even if it corrects until its previous fourth wave that is the previous consolidation that comes to 1200 rupees. I think 1200 appears to be a very good, decent level from which you can look for this stock, entering into this stock from a longer term perspective because that would offer a good risk reward. Not at 1700 or even if it bounces back to 18 or 1900.
Hmm. Okay, that's the view on Neogen. Hope that answers your query. The next one's coming in from Deepu Jayan and wants your thoughts on IRB infrastructure. And I think the time horizon is 1 month here. The stock over the last 1 month has seen good traction. Would you expect the momentum to continue? If yes, from a 1 month perspective, what should be the target?
I think Nisa, I mean, 57 is what one can eye for. I mean, that is around 10% and keeping a stop loss at around say 49. So that would be around 3%. Sorry, 6%. So nearly around 1 is to 1.5 kind of a risk score, which is what
Hmm.
you have on IRB Infra, which is good enough. You can either go plain vanilla long or maybe, buy a put or maybe, probably sell a call on the upside. So have a hedge strategy because the risk reward is probably around 1 is to 1.5. Had it be 1 is to 2, 3, 1 is to 3 kind of a risk reward basically helps to make a good money with a good probability with a plain vanilla strategy. When you have a lower risk reward, probably you hedge it. That would be better.
Hmm. Okay, that's the view. Hope that answers your query on IRB infrastructure. The couple of more queries I want to quickly squeeze in before we come to your recommendations. Alex wants to know your thoughts on Tejas Networks for a fresh entry. Just going through the stock, it has seen serious value erosion in the last 6 months, 44% down. Last 1 month has also been fairly sideways. At 740, would you advise an entry? It's coming off its 52-week lows of 645 or so, 646. But is it a good entry point?
I think from the short-term trading perspective, from the risk reward perspective, yes, it is. I mean, 640 would be the stop loss, that is 100 rupees, and one can target 920, so nearly around
Hmm.
200 rupees. So there's a good decent 1 is to 2 kind of a risk reward. But 640 should be the very strict stop loss level. I mean, below which the stock can even correct to 400 and 450 levels.
Okay, that's the view on Tejas Networks. Hope that answers your query. Last query for the day then. This one is on a BSC, and we have two people writing in on what to do with the stock. I think one is Debu K wants to know your thoughts for 6 months, and Amit Kumar as well wants to know your thoughts on how one should be navigating this stock. Of course, BSC is a phenomenal story, right? Last 1 year returns, obviously the stock has more than doubled. It is a multi-bagger stock, no doubt. But of course, the rules in terms of expiry days are not in place yet. The stock has seen great 10% rally in the last 1 month as well. So here on, would you expect some bit of consolidation, or do you think that after a couple of days or some profit taking, it would continue its move upwards? And for a 6-month perspective, how should one navigate?
I think, see, the stock is definitely, Nandita, deliver very good returns. It will be not good, it will be very good return. And if you remember, I mean, uh, before the bonus, it had actually dropped down to 4,500 or so. So post bonus, it would be around say 2,200 or so. I mean, no, 2,200, it would be around say 1,500 or so. So it was 1:2. So from 1,500 again back to 2,500. I mean, it has given that kind of more than 50% return. And it clearly signals that the probability of SEBI announcing having 2 days of weekly expiry, one for one exchange, and it will be only restricted to these 2 days only. So even forward, there is a less chance of other indices or other exchanges basically coming up with a different date of expiry. That's unlikely. So I think that BSE has shown a good run up already. I mean, most of the things seems to be factored in. If you are expecting that kind of a 50%, 100% kind of return from year on, I mean, I don't see that. It can happen, but I don't see that. So I think the probability of some consolidation of profit booking is higher. If you're already holding this stock, I mean, you should be having a trailing stop loss as an exit plan. But if you want to buy fresh, I think one can avoid. I mean, one can look at some other stocks from the capital market segment like CDSL, which has a higher probability from the medium to long term perspective. From a trading perspective as well, I think BSE, probably if you have a bearish strategy, a bear put spread or something like that might fetch you some returns. So the decision has been in favor of BSE, but that seems to be factored in right from
Sure.
1,500 to 2,500. Otherwise, it wouldn't have moved up by 1,000.
Sure. Got your point. Hope that answers your query, guys. And we've come to the end of the query segment on that note. But Jay, we are running out of time. Before I let you go, very quickly, what are your recommendations for our viewers this morning?
Well, at this juncture, Nandita, as I said, until we don't see a meaningful breakout beyond 25,150 and 56,000 on Bank Nifty, you could be seeing some sideways consolidation of profit book. But then in that scenario, one stock which is very clear is Divi's Lab, which has been trending higher. The results were good. It did not correct much. It was always outperforming the Nifty 500 or the mainline indices. So Divi's Lab, I think with a stop loss of 6,400, one can eye for around 7,400. So a better risk reward. And one I will be giving a conditional buy, that is if HDFC Bank provides a breakout beyond the levels of say 1950, 1950, okay, then it would be a good bet for a target of 2050. Or if Bank Nifty moves beyond say 56,000, then one can look for HDFC Bank. Whatever comes first, maybe if they come together, I don't know. But it would be a conditional buy. Divi's Lab is a straight buy.
Sure. All right, Divi's Lab here, a straight buy from Jay. With that, Jay, I would like to thank you for taking out time and joining in. As always, a pleasure.
Thank you
and
so
look
much.
forward to more interactions in
Likewise.
the future as well.
Definitely,
Thank you.
Nandita. We'll definitely connecting going forward as well. Thank you.
Thank you. On that note, let's bring on board our next guest for today then. Joining me is Mohit Khanna, Fund Manager at Purnartha PMS. Mohit, lovely chatting with you on the show. Welcome. First of all, how are you really approaching the market? We saw a good recovery, 15% recovery from April lows. Now we are back to seeing some correction after hitting 25,000 levels. First question is cash levels in equity mutual funds have risen consistently over the past 6 months. This does reflect cautious sentiment. So, how are you guys approaching, and how much cash are you guys sitting on?
So yeah, good morning to you and to your viewers here. Yes, for the cash levels, we have also increased our cash recently. We are sitting at around 10 to 12% cash on a consolidated portfolio. However, the new accounts coming in, we are cautious of deploying the cash. We are just going, around 60% deployment in, the first few weeks, and then we want to see through the earnings and the ongoing volatility, to play that and make our bets.
Sure. So, would you say that this money will, get deployed in the near term, or it would take some more time? Any trigger or any specific triggers that you would be waiting for before starting to
So,
deploy?
yeah. So our deployment is actually very bottoms up, right? So we are waiting for a couple of earnings to come out. Season is still on. Couple of prices that we want to be in our favor. We haven't got that as of now because of the market rally. But we are very, confident on the piece that we should be able to play the volatility, and the volatility will help us getting good entry points in couple of weeks coming in. Because if you see the news flow as well,
Sure.
apart from the earnings on the external side, that has also continued to remain very, very volatile. We still don't have very clarity on the tariff front. The other day we saw the Japanese long-term yields, going up. Then US saw a downgrade. So there's a lot of macro factors, external
Yeah.
factors that are playing up, and we want to ride this volatility with some bit of cash on the books.
Sure, point taken. But in terms of the foreign fund inflows, we did see FIs making a comeback. Then we saw them turning sellers again, and now again they are kind of returning. But with US yields elevated, would you expect money to or FI money to remain volatile? When will it make a comeback? I mean, how are you reading into the entire fund flow situation right now?
Well, this has been a perennial questions among investors in India, right? In certain months, we see FII making a strong comeback. In certain months, we see them dumping it or out. So it adds very little value in the investing journey. The way we see it. So we would not like to track it month on month or maybe quarter on quarter. The point is that if the earnings continue to come and the growth remains, as per our expected lines, the FIIs will come, right? And there's very little option also for them, relatively also across the globe in terms of real and the nominal GDP growth rates. So the currency has been stable. That has been good or favorable aspect for them. The investment decision for us as Indian investors building up portfolios is very, very bottoms up. The investment decisions for FIIs looks like a lot of global allocation. So in that sense, there is no parity, and therefore it adds very little value, tracking those flows. So I think let's we should all move on from that's piece of news, and look and focus on companies that can deliver strong earnings growth.
Okay, so when you say that you're taking a bottoms up approach, any particular segments that you are really looking at? I know bottoms up means stock specific, but is there a cluster where you're looking at? Because if you look at earnings, I want to obviously get your assessment of the entire earnings season as well. Top line growth has still been amiss when it comes to corporate earnings. So
Correct.
anything that really caught your attention in terms of outperformance, and anything that was a major disappointment according to you? Take us through your overall assessment first.
Right, right. So if you see the overall earnings, what have come in as of now, Nifty 50 growth rates, the sales revenue growth rates are tracking somewhere around 8 to 10%. Similar is the EBITDA growth, but the PAT growth has been lower at around 5 to 7%. Now, Nifty mid cap index, 150 index is tracking around 10% sort of an revenue growth and around 15% EBITDA growth, but good 18 to 17% of a PAT growth. If you see our portfolio, the Purnartha's dynamic mid cap portfolio here, we are tracking somewhere around 15% weighted average revenue growth and 31% EBITDA growth and around 25% PAT growth. Now, if you see, within the market and within the size segments, in the mid cap space, the outliers in terms of earnings delivery has been healthcare, CDMO, IT, metals, and chemicals, right? And what has disappointed is energy, real estate, and telecom, right? And that is exactly what our overweight and underweight positions have been, within our mid cap portfolio that we continue to like, and we continue to see good earnings trajectory from even from here on, in healthcare, CDMO, the metal companies that we own, the AMCs, the consumers, discretionary FMEG. So
Hmm.
those kind of segments within the whole market space continue to outperform. If you see the Nifty 50 earnings, industrials and cyclicals have been, a standout performance within Nifty 50 or large caps. We also continue to like industrials. Government related rolling stock capex is somewhere we want to be. We are continue to focused on, and we think that this is where we can see a lot of new order wins coming in coming quarters.
Hmm. Got it. Good to know your overweights and underweights. But I was just going through your overweights list. You're bullish on cables and wires as well. But competition is
Yes.
set to intensify in this segment. With Ultratech's entry, some of the companies are gearing up with capacity expansion as well. They have announced capacity expansion. But do you think the incumbents are well equipped to deal with heightened competition? And what's your outlook? What makes you really bullish despite the competition woes that these guys will be facing soon?
Well, first of all, the first product that should come out of the competition is, 4 to 5 years away, right? And we still
Hmm.
continue to see a very strong growth rate in the industry, right? Around 15, 16%, growth rate is coming out of that industry. So my sense is that it is, yes, one of the risk has emerged with an increasing competition coming in, but it is way too far. And by the time the product actually hits the market size itself would be a lot different. So, and the third point is that incumbents do not continue to make a very high amount of margin there. So the play on pricing to attract additional volumes, that ability is very, very limited, even for the new player coming in. So let's see how it plays out. As of now, we see no alarming bells. We continue to see the consumption
Hmm.
pattern, coming out very, very strong in next couple of years, and we'll take it from there.
Hmm. All right, that's the view then. But the last question, really, and this question I think I have been asking all our guests with the early monsoon arrival. How would you play this theme? Would you look at FMCG? Do you think rural-facing names like Dabur, Marico, warrant a look right now? Would you look at two-wheelers? How would you play this entire theme?
Right. So we have been positive on the consumer discretionary side. I think FMCG volume growth should definitely pick up, but should not be good enough to have a
Hmm.
strong earnings growth rate. However, in some pockets and beverages categories, we do like couple of companies both on the large cap and the small cap side. If you look at the two wheelers segment as well. So the early monsoon this year, and this should be seen in light with two good monsoons in the last two previous years. We and the tax rebate that has been given to the masses in the new budget, and also when you move a lot of salaried people from old regime to the new regime, new tax regime, you are not obligating them to do the ATC investments, because you don't need to do that in under the new regime.
Hmm.
You can still do it if you want it. So that is leaving a lot of cash out in hand, or the discretionary income in the hand of consumer should increase tremendously. We want to play that. Two-wheelers is definitely a
Hmm.
play with that. Within the auto space, we also continue to like the auto ancillary businesses. Couple of ancillary businesses which have strong presence both in ICE and EV markets continue to be brand agnostic. So I don't have
Hmm.
to really worry about which brand would do well. But because of the strong product offering on the EV side as well, they continue to benefit and deliver strong growth
Hmm.
rates and steady margins out there. So two-wheeler is one space that we continue to like. And ancillary is a place which we like little bit more than the two-wheeler also.
All right, that's the view from Mohit. With that, Mohit, I'm afraid I have to cut short this discussion. We're running out of time, but I would like to thank you for taking out time and joining in, and I look forward to more interactions in the future as well.
Right. Thank you so much.
Thank you. Well, on that note, markets are where they were, just a while ago. 24,770, we are holding on to the 24,750 mark, down 50 points on the Nifty, Sensex down 200 points, but the mid cap index continues to outperform. The Bank Nifty marginally in the green, after a weakish start. So yes, that's a good sign as well. And if you look at the top movers on the index, of course, ITC being the top laggard after the big block deal. Aside of that, you have HDFC Life, Bharti Airtel, SBI Life. So life insurance in general doing well today after good numbers from LIC. But with that completely timed out on this edition of Opening Bell, thanks for tuning in. But don't forget to tune in for an IPO interview at 11:30 a.m. We will be getting the management of Hotel Leela. So don't forget to tune in for that. But goodbye. Thank you. Thanks a lot for watching. Have a great day.